Hello, my friends, and thank you for joining me. I'm Dani Beit-Or, and I want to take a few minutes to do a follow-up video on questions that came during and after the recent webinar we did hosted by Real Estate IQ. So I'm gonna address some of those questions that came after or during or after the session that we did about a week ago. If you have not watched that session that we did, I believe it was January 22nd or 23rd, Thursday, January 23rd, I believe, of 2025. It was a great session. Loved the energy. Really pleasant, love sharing with you, real estate investors. We had such a good kind of content driven session that follow-up questions came, and the team at Real Estate IQ suggested that I do a follow-up with some of your questions. We're going to only have maybe 3 or 4 questions. I'm going to tackle them right now. I do want to mention before I jump into those questions, I'm skipping my introduction just because if you watch the session, the recorded session, and if you don't have a link, ask me or ask the team at Real Estate IQ. They'll provide you with a link to watch the recording. It's about an hour with a lot of valuable content. I give a full introduction to who I am and my background. So I'm skipping it for the moment because I really want to keep it as short and as simple and as straight as possible. Before I start, I just want to mention, first of all, I want to thank Steve and the entire Real Estate IQ team for having me, for putting it together. I know it takes a lot of time and effort and, kind of wrangling multiple things in order to make it happen and to make it very valuable. So if you are part of the Real Estate IQ members, by all means, good for you. We are already working on a few more sessions, educational sessions for you guys. If you, for some reason, got to see this video or the previous one, the recorded one that we did from a few days ago, and you are not on the Real Estate IQ list, I suggest you sign up because a lot of quality and good content, not just myself, is coming out from this group, right? So this is a group that helps you become better real estate investors by providing a lot of quality services and quality content, right? So make sure you sign up. Just go to their website, realestateIQ.co, realestateIQ.co, and sign up to their newsletter, to their list, in order to be able to receive additional content, events, etc., coming from these guys. And with that being said, I want to jump in and kind of tackle 3, 4 questions that came as a follow-up to our seminar, our session that we did about a week ago. Okay, so question number 1. Do you have tips on actually building the cash flow for single family, but not just betting on equity? Okay, so we talked about it a little bit during the session. Nowadays, definitely challenged with a higher interest rate and the starting position of pricing and rents to actually generate cash flow to begin with, or even a positive cash flow to begin with. A lot of us, when we are thinking about real estate, maybe we can play a little bit more of an equity position. So maybe we're able to buy a property with a bit more equity from day one, but it still doesn't mean it's immediately cash flowing nicely. So a couple of things you can do. 1, lower your expectations. 1, make sure you analyze properly your investment. Don't be optimistic. Don't be super pessimistic, because that will kill the deal. So try to be realistic, maybe somewhat of conservative, careful, but not overly conservative. That will impact the analysis. So that's number 1. Number 2, lower your expectations a little bit for the time being, right? Meaning, if you're chasing the high interest rate, the high cash flow with the interest rate we're seeing today, while putting 25 or 30% down, maybe you should calibrate your expectation a little bit and lower them for the moment. And why am I saying for the moment? Here's what usually happens when it comes to cash flow. First of all, we start with maybe a low cash flow because of what's happening with the interest rate. Hopefully, and very likely, in the coming year, 2, 3, or 4, there will be an opportunity to refinance, at least to lower your interest rate by half or a full percent, and that will improve the cash flow, right? So that opportunity comes along. Also, historically speaking, rents do tend to creep up, right? They scroll up. They're not necessarily shooting up year after year, but they tend to go up. So here you'll have a situation, but slowly you'll be able to hopefully refinance, lower the expenses, increase the cash flow, increase the rent, and increase the cash flow. So you will maybe start at a low point, but don't think just about the starting point. Look at the head, look at the next 5-10 years, and kind of try to predict what the rent will be. Maybe you'll be able to lower the interest rate just a little bit. And for that reason, even when you're starting in a tight cash flow position from day one or year one, it will very likely improve over time. Lastly, and not a lot of investors are aware of it, as investors, especially if we are beginners, but not just beginners, you will see that over time you get a better ability, understanding to make decisions about expenses. And what I mean is slowly you'll be able to navigate those waters, and you'll see that you'll be able to lower your expenses of maintenance, on turnover, etc. So even if you make 10, 15, 20% improvement on the expenses from being a better investor over time, you just have to go through those ropes and learn to you can't just teach it right off the bat. You have to go through some ropes in order to get there. You will see that from multiple areas, interest rate, rent going up, improvement of controlling the expenses, the cash flow will increase, right? So those things will work in your favor. So just lower your expectation and don't focus just on the cash flow. Cash flow is important, but it's not the only thing. Thank you for that question. Next question. I talked about listing specialist, something that I started using. I call it listing specialist. And someone is asking, how can you find those credible listing specialists? The simple answer is not that easy. The more comprehensive answer, you gotta look for people who only do listing or the primary do listing. And I'll give you one tip that I use. I do not take listing agent, listing specialists who work for property management companies. If they work for a property management company, they will adhere to the property manager's guidelines or processes. Not that I don't want them to follow certain guidelines, but I just don't want them to follow the traditional methods of operating of a property management MO. That is something the reason I came up with this listing specialist function is to move away from the traditional listing agent that work under the property management company. So when someone reaches out to me, when I'm searching or looking for and interviewing people, and they say, I work for a property management company, very likely this person is already disqualified, unless they are saying, listen, I used to work, I don't do it anymore, I now do only listing, and then we can definitely have some sort of a conversation. Thank you for that question. Next question. A bit of a complicated one, or sorry, not complicated, but a lot of details. Should every rental property go into a separate LLC? If it's an out-of-state property, do you open a local LLC to own it, or put it in the LLC registered where you reside? What are the general known implications of having multiple out-of-state LLC which own properties in states other than your residing states? Well, that's a lot, right? So first of all, I gotta say, you know what? Because this is such a legally heavy dependent question, I am not anything except an experienced investor, right? So I can't really tell you what to do about it, but I want to give you some ideas or things to think about, right? First of all, a lot of investors are really becoming, I don't want to say use obsessed, but focus on the LLC more than I'm investing. I know what happened for 20 years. I've been listening and attending events and hearing, you know what, attorneys are very good to put fear in. A lot of us have a copy-paste opinion about the idea of LLC. My idea is this. I'm not asking if to do an LLC or not to do an LLC. I'm asking what is the situation and what the situation calls for, right? Sometimes the most likely way to go is to utilize an entity, an LLC. Sometimes it could be okay, but maybe it's not the most ideal scenario, right? So just keep that in mind. Be a little bit open-minded. This is not a binary question. It's more about there's more to the question than just what you're asking. I fully understand you're wanting to get a clear answer. And you know, in this matter, there's never a clear answer. But I want you to think about the following ideas when you're trying to determine what to do. Number one, why are you asking if you need an LLC per property? Why aren't you asking, maybe you need to look at it from an equity position and not from a property position? Let me tell you what I mean. How about if you have 5 properties or about to buy 5 properties, and let's just say 3 of them are with mortgages and they don't have a lot of equity. And let's just use for this example, 2 are completely cash purchase or no mortgage and have a lot of equity. Maybe the better situation here would be to set up 3 LLCs, one that will hold the 3 that are with no equity, and one per other equity or a lot of equity kind of a setting, right? So right now I just showed you I'm completely looking at the idea of how many LLCs to set based not on number of properties but based on equity. So just something to think about. The next thing I want you to think about is this: when you have LLCs are not expensive to set up and they're not expensive to maintain, right? The only hassle is just knowing that you have to pay a registered agent every year and file taxes every year and renew and file the annual report and and all of those, and it adds up with administration, hustle, annoyance. Now they have this new thing of this new reporting rule. So you know what? It just creates more, instead of having easier, simpler life, we are just putting on more items onto us, like LLC and multiple states and etc. So that's why I am not always saying run and do an LLC. Really evaluate it on a case by case, depending on type of activity, right? If you're flipping, probably LLC is better. If you're doing long-term rental in a quality type of rental properties, maybe LLC is not as critical as when you're flipping. See, so all my questions are not here's the answer. It's really related to your activity, what you're doing, equity, etc. Right? So keep that in mind. Ask the questions a little bit differently and try to come up with a relevant answer for you, because it's a very individual or a case-by-case situation. I wish I could give you, here is the answer. Nobody will do that, not even an attorney if you talk to one. Very likely not going to give you that. So that's regarding this question. And by the way, we are talking, me and the team at Real Estate IQ, to have a session that going to talk about LLCs, not from the legal aspect, but from the pragmatic, the trenches, someone who's been dealing with entities and properties and flipping and renting for many years. I want to share that with you. Hopefully we'll set up something with Real Estate IQ in the near future. I think we're down to the last question. If I put a down payment on a home to begin renting, is it okay if the property just pays for itself and I don't make any positive cash flow? I love that question. The question in simple terms is, if I have a setting where I'm not generating any positive cash flow, but I'm breaking even, is that okay? I think that my simple answer is yes. The more comprehensive answer would be, it really depends on other factors. Let me give you a clear example. I have a property that there's so much equity in this property from day one because I was able to buy it in a very certain way, but it's not cash flowing, right? It's breaking even. So if it's breaking even, it's not very exciting for me on the cash flow wise, but I have a lot of equity. I mean, from day one, I was able to buy it like 25-30% below market value, right? So this is an example where cash flow could be great, but I'm already having equity. Now, I also know, like I said on the first question, that this cash flow position is not for life. It's going to be a tough 1 or 2 years, and then rent will start creeping up, right? maybe I'll have an opportunity to refinance, hopefully that will change. So I'm not really focused on that cash flow as if it's the only most important thing. If you buy a house, let's just say you buy a house for 200,000, that's really worth 300,000. You know what? 265, right? So you only $65,000 in equity. Those things happen, but it's breaking even. Is that a bad decision? Well, I don't think so, but I really want to see on other factors. What am I buying? Is it really 65,000? Are there any reason for me to be concerned about, surprises, etc.? But if you are saying, hey, it's a good house, there's an opportunity, distressed seller, I'm getting it really at a discount, cash flow is not going to be great. For me, sounds pretty good to begin with, and hopefully over time you'll be able to optimize the rent or the cash flow to move from a breaking even situation to a positive cash flow. Thank you very much for taking the time and watching this follow-up video. Again, as a reminder, go back to the original video of this we did a week ago. Reach out to the Real Estate IQ team or myself to get a link to that video if you want to watch it, because all my answers are really kind of touching or follow up on the video. And make sure if you haven't, subscribe to Real Estate IQ on realestateIQ.co in order to be on their list, so you can learn about upcoming events. We are already talking about a few more events, hopefully in the coming week, like to do a series. And by the way, I want to tell you guys one last thing. Real Estate IQ and I did a session. It's called Ask Me Anything session, or it's like an open session. I love those sessions, and I hope we're going to have another one, because instead of me coming and teaching or talking about something specific, we do an open session. We're just talking about different things related to real estate investing, and it's an opportunity for you to bring the questions that you've been carrying with you for quite some time, and you can ask the group, you can ask me, you can ask someone else and get answers. So it's more of a open discussion about real estate investing session. So make sure you watch out for those, in my opinion, most exciting events. Thank you. Have a terrific rest of your day. Bye-bye.